I'm Brian Burdick. I'm an attorney with Barnes Thornburg here in Indianapolis, representing the Indiana Hospital Association. And I brought this issue to Senator Baldwin's attention when these letters came out in October from Anthem to the hospitals that said, as part of your next year contract, we're going to put a 10% penalty on you if you use or allow a non-participating provider to provide services in your facility. And so it caused alarm everywhere because, look, we certainly recognize our role of trying to make sure that participating providers are providing services in our facility, but there's lots and lots of cases where that doesn't make sense, oftentimes with specialists, radiologists, pathologists, anesthesiologists, so it's out there. Okay, so let's just stipulate that that's out there. And you have to ask yourself, why is this happening, right? What's the question here? What's going on? And so the issue really is twofold. We had a nice meeting with David Ober, great guy, doing David forever. He put some colleagues together with us at IHA and talked through what's behind all this. And as Senator Baldwin referenced, it was losing at the IDR process under the Federal No Surprises Act about 85% of the time. And so that should be alarming to everybody. I mean, this was something that was set up to protect patients, to make sure there's fair reimbursement. And as Senator Baldwin mentioned, it's a baseball arbitration. Doctor gives a number, Anthem gives a number. I presume the independent arbitrator chooses the closest one and what he thinks the fair cost is. And so when you hear that you're losing 85% of the time, you're probably just not offering a fair reimbursement, or you're plus one more away than the provider is. But imagine the desire to be in network, assignment of benefits. If I'm getting a fair reimbursement, I'm going to sign up anyway. And this is where we're going to get into the issue of kind of antitrusty behavior or market position or what have you. So we had this meeting with them. It was great. Wasn't convinced about that their solution by saying we're going to penalize you, hospital, so that you use blunt force trauma to the head to get a physician into your network, Anthem. I mean, that's the solution here. Or, Anthem, you pay them a little bit more than you did. Start to win a little bit, and that will help save people money. It shouldn't be the default. It's just you're not winning the game, and so you're just trying to change the rules of the game. That's really the case. Now, secondly, we did some other digging, and turned out in 2024, Anthem didn't even show for 30% of these things. Now, I serve a dual role here. I mean, I'm here as counsel to IHA, but I'm also a managing partner in the Indianapolis office of our law firm. We've got 25 offices across the country, but I'm the chair of our Pensions and Benefits Committee. I am a fiduciary to our folks. I negotiate these contracts. We're self-insured. Anthem is our TPA. I don't like to hear that my TPA is not showing 30% of the time trying to defend, get my costs down. You want to lower my costs? And this is a great question, Representative Mayfield. Win more, right? If you're offering $100 and somebody's said, I think it's 1,000, and the answer is 600 would have been the median number of what the independent arbitrator picks, I'm going to choose the one closer, the $1,000. Okay, well, maybe try 150 next time. Try 200, try 250. At some point, you start to win. Okay, that's good for Barnes Thornburg. That's good for me, self-insured. Not just take it or leave it, which is the way these negotiations go because of the market position that they're in, and I'll get to that in a second. But that's become a course of dealing. That's what caused it to come here. We said, look, why are we as hospitals in the middle of trying to force physicians into your network? That's all this is. I'm going to penalize you. Well, what kind of behavior do you think that causes? Gee, Brian, go tell Dr. Baldwin, man, you got to get network or you can't have any rights here. You can't practice here. That's just me. That's just using me to try to force him into a deal that he doesn't want to be into because likely the offered reimbursement is poor. How poor? I'd rather take my chances going to an independent dispute resolution and see where it comes out. So that's kind of why it happens here. Now let's talk about, the market position. Look, this is the product of how efficient markets break down. This is, the Affordable Care Act created single payer by another name. This is what the goal was. What happened was the Department of Justice and the Federal Trade Commission just approved all this M&A activity, and we collapsed an industry that used to have a ton of market participants into about 4.5 in the country. In Indiana, 2. Anthem and United have 86% of the market. That is not an efficient market. Now, in the old days when you had to compete for the work to try to get doctors in their network, they would offer higher reimbursement and better terms. If they were trying to get Barnes Thornburg's business, they would offer more competitive cost and better service to our employees. But when there's only 2, the question is, here's a contract of adhesion. Here's what it costs. Here, Dr. Baldwin, here's what your deal is. Sign here. Where are you going to go? The other guy? That's what happens in the marketplace. It's the indicia of behavior. I don't know how many market participants it takes to make it an efficient market, but I absolutely know the indicia of behavior when you don't have it. And that's this kind of stuff that you've seen elsewhere. So it is a process of, and everybody has this, and I certainly have it amongst our employees, where costs go up, premiums go up, and the service or coverage to my employees goes down. Now, I don't blame Anthem. I don't like it, but I don't blame it, because their fiduciary duty is to their shareholders, not to Barnes and Thornburg. They have a contractual obligation to me. They don't have a fiduciary obligation to me. And they fight in this committee to not be fiduciaries and those kinds of things. Why? Legally, under the securities laws, their job is to maximize return for shareholders. In the old days when you had to compete for work, that was competitive payment, signing up docs to be in my network, network adequacy, getting plans like Barnes and Thornburg as a client, and other employers around the state as our clients. Those interests were aligned. But make no mistake about it, is because I need to maximize return for shareholders. But now I've won the race. I don't really have to compete. Where are you going to go? Okay? They're maximizing return to their shareholders. Now, that doesn't make it right, though, for our participants. That doesn't make it right for my employees. That doesn't make it right for the doctors. And why the hospitals got put in the middle of it, which was the strangest policy of all time, I still don't get. You know, why am I responsible for shoving people into your network, which is really what this is about? So it's effective a duopoly. That's all. It's just when a market collapses, and we see it in lots of ways. It's interesting. Just today, somebody texted me that Anthem announced a Medicaid or Medicare Advantage new policy. I don't know if Chairman Carball, this has been texted to you, but I'll do it when I sit down here. The new policy is, I'll make sure I get this right. Imagine this for a Medicare patient. Let's see. Preventive services on the same day as a wellness visit will be reimbursed at 50% of the applicable fee schedule or contracted negotiated rate. So I'm a Medicare patient. I go in and somebody says, hey, you're due for this immunization, flu shot. We'll schedule that to come back, or we'll reimburse you at 50% of the time. Why? Well, what's beyond, if we're trying about health care, why would we want, hey, Brian, who's on Medicare, comes in the door, you need this immunization. Why wouldn't we want to have policies that encourage all that to happen at the same location? Just announced. I'll text it to you here. So this letter that comes out, fascinating to me, coincidental timing. You know, this policy about the 10% gets rolled out in the 14 states that Anthem's in. You know, they come out and this letter comes out the day before the committee hearing in the Senate. By the way, this bill passes in the Senate 44-1, passed committee, I don't know, 7-1. It was 1. I don't know however many voted yes. People on the bill, and I failed to do this. Thank you, Senator Baldwin, Senator Randolph, Senator Chris Garten, Senator Tyler Johnson, Senator Eric Cook, Senator Liz Brown, and thank you, Representative Barrett and Representative Carball for co-sponsoring it. I failed to say that at the beginning, and I apologize for that. But this letter comes out exempting these folks, which we had a big discussion about. Why aren't they exempt? Back when IHA and David Ober and the folks from Anthem, and comes out the day before this hearing. When, you know, if you go talk to people like yourselves and people are doing the job, they're going to find out that that hearing is probably not going to go that great. So this gets sent out. Now you hear, well, they're exempt. I suppose I get a letter on March 15 or March 1 if you guys are out early. It just reverses that. Why wouldn't I? If you can do it. Now let's just say that they're of good nature and really mean that. Pass the bill. Then we're all aligned. That just takes away the risk anyway if we kind of buy into the policy. I don't think the behavior, certainly it's Medicare Advantage policy that just came out, provides indicia of a desire to sort of exclude many people. I mean, it is using your market position to say, I can't win at IDR. I don't want to try to figure out how I could make the situation better for my customers, Barnes and Thornburg, that I start winning, because when you lose or don't show, I get tagged with this in our self-insured plan. If you really want to help me out, do a little bit better, win more. That helps me out. That also reimburses doctors fairly. Well, let's get back to this about, you'll hear from doctor groups, this is about doctors. And about hospitals, we just got drawn into it by this crazy policy that comes out that says we're going to use you as a blunt instrument to beat people into network. That's all. We don't want to be a part of it. We appreciate the relationship with the independent doctors and those that are employed by us. I want to just mention something else about market position, and then I'll be happy to answer whatever questions. 10 or 12 days ago, you might have seen that CMS came out with their adjustment to Medicare Advantage plans, and they agreed to increase cost, I believe, 0.9%. Now, the market had priced in, and people believe that would be an increase of 5%. On that day, which is an announcement of a less than anticipated reimbursement rate to providers, United lost 20% of their market cap, Anthem 14% of their market cap. Now, how important, is this money getting to providers, or is it stopping in the game of, and this isn't about Medicare Advantage, but I'm just saying using your market position that you have to scale cash out at every part of this. Medicare Advantage comes about 82 cents on the dollar. People think Medicare is 100%. It's not. Where's it going? CMS says we're going to raise reimbursement 0.9%. That would go to providers. The marketplace thought it was going to be 5%. Who got whacked? Insurers. How? Why? And how severe must that be to the insurer that you lose 20% of your market cap in one day? Lots of things to look under the hood here, folks. We've talked a lot over this time about decreasing healthcare costs. This increased costs, okay? Some hospital is going to have to raise some rate somewhere to make up for the 10%. You know, this doesn't go anywhere. It doesn't get to Barnes and Thornburg. Go win more. Go win more. Treat the doctors fairly. Don't put our members in the middle of it. I'm happy to answer any questions. Thank you for this.
Yeah, thank you, Brian. I mean, I think your point's pretty well taken. That I didn't know the timeline of when this notice came out with the exemptions in there after the conversations, and that it could be reversed. I think that's part of what we need to contemplate here. My question for you is, in the narrow case of there's in-network providers available, but the hospital uses the out-of-network provider. What does the hospital not have some responsibility to try to use that in-network option for that patient?
They do, and they try to. But there's oftentimes specialists or others. It could be availability. It could be somebody with a unique skill set, but they do, and that occurs. And for somebody to say it doesn't occur, that's just not accurate. But I mean, I'd let hospital after hospital come here, represent the association, and tell you how they handle that. But I did ask those questions. I prodded it because you and I had that discussion before.
Thank you.
You're welcome.
Any other questions from the committee? Representative Shackelford.
Thank you, Chairman. So if we do not pass this bill and the penalties continue, normally how does the hospital transfer the cost of that penalty either to the provider or the consumer? How does that work?
It just becomes increased cost. It's just a matter of somewhere blended over everything. Something's going to cost a little more, because if that's 10% of something that we got paid for a service that no longer gets paid for, we got to compensate it somewhere. I mean, these, I think Senator Baldwin touched on this. There was a Kaufman Hall report out here. Half these hospitals operate at a negative operating margin. On average, it's 1.3%. I mean, this is just an issue. It's not so much like profit. These are nonprofit institutions. I mean, you get into great discussions about cash on hand. I hear all about that. It's always very interesting to me about cash on hand. The state of Indiana is blessed with a AAA rated credit rating. That's awesome. Governor Daniels got it. It's got our debt in order, et cetera. State has about 90 days cash on hand. There are hospitals that have 400 some days cash on hand. There's not a single hospital, to my knowledge, that's rated AAA in the entire country. But see, Standard & Poor's, S&P, and Moody's, their job is to homogenize credits for investors, for Goldman Sachs, for Fidelity Investments, to say a AAA credit is a AAA credit is a AAA credit. So when you buy that, you're sharing the same risk profile. So if days cash on hand is what matters, which is an interesting discussion about how you think of hospital finance here, to your question, you'd say, well, why shouldn't you have 90 days cash on hand, hospital? Well, it's simple. The state of Indiana has millions of payers. If I don't pay my income tax, bad for me, but the state of Indiana is going to survive, because everybody's paying sales tax and other income tax and corporate tax every day. A hospital has 3 payers: the state, Medicaid, feds, Medicare, private insurers. I would concede 4 payers, because Anthem and United in our state, but call it 3. So that is concentration risk that rating agencies look at and say, wow, if somebody unilaterally changes the terms, you could cause these hospitals to fail. There are county hospitals with days cash on hands in the teens. So let's say that Anthem and United are of good spirit and decide not to change anything and try to keep people open. You know, the risk you have to healthcare in Indiana, the federal government, they may wake up someday and say, you know, we got a big debt. We have a huge deficit. Instead of paying every 30 days, we're going to pay every 60 days. Oh, so now a third of your payments as a hospital just got cut in half for the year. You're out of business. So it's like concentration risk. I mean, things get thrown around, but you have to think of how these operate in these macroeconomic themes. I appreciate your point, but that's what would happen. Because we have this huge risk, somewhere it gets rolled into some cost, you know, that gets passed along probably just to keep the 1.3% operating margin.
Thank you.
You're welcome.
Representative Lehman.
Thank you, Brian. Just kind of a question, kind of 30,000-foot view. I know the policy went into place. There was pushback on the policy, and the response to that is this bill. Is there, you see any pendulum swing going too far with 189? I mean, I get it. The reason I say that is once we put it in statute and have this prohibition, now there's not a negotiation standpoint. There's not something I can do to make this better or worse. It's just barred. And so I guess I'm just concerned on is the pendulum swing going too far the opposite direction, in your opinion?
Yeah.
And then I got another question.
Yeah, interesting question. I mean, philosophically, I think not. I think this sort of stops an abuse that occurs because of the contract of adhesion, the unequal, bargaining power that happens. I think the solution to that is probably forces a discussion if this goes into law. Perhaps Anthem will negotiate with doctor groups who can speak for themselves and try to offer them a little more money. I mean, it's interesting. There's I forget her name, and I apologize, a lady from Anthem who runs the unit that does this IDR stuff, testified in the Senate committee with Senator Baldwin. She made a comment that their goal is to reimburse physicians at 110% of Medicare. I don't think Dr. Barrett's going to work for 110% of Medicare, okay? So, I mean, it's just, you might find that it helps put a railing back in that creates a market to behave efficiently again, and you have a little more fair negotiating. And again, the simple answer is it's not an abuse of IDR. It's Anthem's choice to offer what they offer, and they're a very, very astute company with all kinds of technology and skill. If it were me, I don't have much technology skill here, just offer a little more, you start to win, and you save your customers money. So they could figure it out. So I think it provides a rail that tries to make a market more efficient when it's fallen apart and been inefficient, but that's just my opinion.
All right, thank you. Well, the other issue I'll ask the physicians.
Thank you.
Any further questions for Brian? Representative Mayfield.
Thank you, Mr. Chairman. Brian, so you say pay a little more. Is that going to guarantee that that the claims are not submitted for IDR? Because if you're exploiting a weakness in the federal law, doesn't matter if I'm getting paid fairly. If I can get paid even more, I'm still going to submit my claim.
Yeah.
So paying more is not going to guarantee that it will control this IDR process.
Yeah, it's interesting. The presupposition is there's an abuse. And the interesting thing is, for that to sort of be in cahoots, the independent arbitrator's got to be in on the game. I don't think anybody's accusing the independent arbitrator of being in on the game. If I were getting paid something more reasonable, I wouldn't roll the dice and go and potentially lose. Because if you're a physician, and they can speak for themselves, you're going there and just submitting a number, and Anthem's submitting a number. You could just as easily lose and be stuck with whatever this is. If you start getting a more reasonable number, or you start losing at the IDR, you're not going to spend the time, effort, and money to go challenge at IDR because I'm losing all the time.
But you're going to get one of the two. So you're going to get, even if you got the lower amount, which is probably what you were offered to begin with, you're going to get at least that.
I don't know that. I don't know that point.
Okay.
I know this. When they don't do it, as somebody that's a plan sponsor like I am, I get stuck paying this. And I know an independent person is probably going to look at it and say, well, here's what we think it's worth. Who's closer? So I'm asking Anthem on behalf of Barnes and Thornburg here, get closer. I'd rather pay this. I'd love to pay this. I'd rather pay this than I would pay this. And that's what we pay you for.
So you've also mentioned that this is being pushing practices to join the network. We already established that it doesn't apply to emergency care, rural hospitals, critical access hospitals, safety net hospitals. and it doesn't apply in situations where an in-network provider is not available. So explain a little bit more, and hopefully the other side will also.
Yeah.
How do you envision that as a push to join when you're excluded if there isn't an in-network provider?
The exclusions that you have come out of a letter that was provided the day before this hearing. This policy had been in place since October, and these discussions occurred. There was no interest in that until you figure out you're going to get your head handed to you in a committee hearing. That's going to be, so we're going to say, oh no, we're excluding all these people, so it can't be about a rural hospital or whatever the case may be. If it's that easy to change, it's that easy to change. On March 15, I fully expect to get something that reverses all of that. So they're not really excluded. And I think the way this all starts, so that wasn't even the game, wasn't even what you just read, not even in the game when the original letter comes out. So this letter lands, it says, hey, look, so-and-so hospital, Greene County Hospital with 17 days cash on hand. You better tell all your physicians they got to be in network or we're taking 10% out of you. Okay? That's great that everybody starts saying, this isn't cool. And we start to get some momentum, and then somebody says the day before a hearing, nah, take you, we don't mean you. If it's that easy to change, great. But if they're of good heart, if they mean that, pass the bill, put it into law. We're all aligned. That's what I would do. Yeah.
All right,
For sure.
Any further questions? Representative Borders?
Thank you, Mr. Chairman.
Could you put your mic on, please? Representative Borders? Our large viewing audience would love to hear you.
Yes, thank you.
Also, sit a little closer to the mic so they can pick that up. Thank you.
Thanks, Dad.
Behave, son.
I live in Greene County, and when you said they had, what was it, 17 days cash on hand?
They have a low number of cash on hand,
But
so yeah.
in essence, I mean, I know in essence what that means, but is that what I'm thinking that it means, that literally in 17 days they're out of money?
No, I mean, they just keep plugging away. They work their tail off. It's emblematic of small rural hospitals in the state that don't have a lot of cash on hand, that are struggling to stay alive. Just an example of something like this. What's interesting about all these policies we've worked on is, those kind of things that occur. I mean, they just cut their OB unit, as you know, as mentioned here earlier, trying to stay open.
They are consolidating with Davies County Hospital on their OB. I mean,
Yeah.
I do know that, but regardless, yeah. Okay, thank
Yeah,
you.
puts it about 40 miles away, I mean.
Right,
Yeah,
I
but they're trying
understand.
but those are just, that's not new news to this group also, about where rural hospitals are and
Sure.
yeah.
Okay, thank you.
Uh-huh.